So welcome, good evening, Happy New Year. Obviously a little bit belated, but my name is Josh Wilton. I'm a co-owner here at Queenston Realty. Myself and my two partners, Vanessa Shives and 𝐂𝐎𝐍𝐄𝐓, and our amazing staff of associates. And I know we have guests from our property management company and other companies that we work with. So welcome. This is the Greater Princeton Market Review and Forecast. And I'm going to be brave enough to put up my numbers from last year, my forecast. I was more right than wrong. So, but that being said, we have a lot to cover. So just please understand there's no agenda to sell you anything. This is just a very in-depth presentation on what's happening in the market, period, full stop, end of story. So we're going to kind of go national, state, county, and then we're going to get into the granular aspects of the neighborhoods and the towns. So first things first, when we look at national numbers, you would more or less have to be living under a rock and realize that there's not a lot of homes for sale, at least in the Northeast. So from November 24 to November 25, we saw a nice shift in inventory. So you can see the green, that's upwards of 30 to 40%, dark green 50%. More inventory came to the market 2024 to 2025. So that's a very good thing. However, this is the issue. So when you look at the inventory from 2019 to 2025, November to November, 2019 to 2025, the Northeast, which is where we're located, right? We're still down like 40%. And I'm going to go into a lot of detail as to why that's happening, what we can expect, et cetera, et cetera. You can see in Florida, please remember Punta Gorda, Florida, Austin, Texas, 54%, San Antonio, 42%. So a lot of the, as I call them, the perennial boom bust markets are way up in inventory. They have new construction. We don't in the Northeast for the most part. So in the Northeast, we're still 50% behind standing inventory compared to where we were pre-COVID. So COVID is still lingering, at least in the residential real estate markets. So again, if you look at the active inventory shift, brown is bad. To make this screen easy, there's our friend New Jersey in the right-hand corner on the East Coast. The entire Northeast is locked into a very low inventory cycle. And you can see Florida, Texas, and then the inland part east of California, you can see inventory building. However, the Northeast is very locked up in a low inventory cycle. So again, that's a 6-year view from 2019 to 2025, November to November. These are some markets that you may be reading about nationally, like the sky is falling. And again, when you look at Memphis, so I was reading an article in Memphis where there's neighborhood in Memphis where like 30 to 40% of specific neighborhood is now for sale. So, the builders came in COVID, people were moving there in droves, very cheap, affordable, et cetera, et cetera. Well, now there's a lot of inventory. And, that is that sort of like boom bust cycle in real estate. So you can see in the COVID years, there was nothing for sale, right? Now there's a lot of inventory in Memphis, in Dallas, in San Antonio, Phoenix. So anywhere where you can build, where there's land, they built to catch up with demand, right? And we'll talk about is demand slacking. And then when you look at where there's no inventory, in the bottom left, obviously New York, New Jersey, which is us, we have not recovered from COVID in terms of the overall inventory cycle. We're still just in a very low inventory cycle. And by the way, if you have questions as we go, just as a reminder, if you're watching this on YouTube, there is about a 20-second delay from Zoom, which is what I'm presenting on, to YouTube. I do have somebody monitoring YouTube, so just put the question in the chat. The chat is enabled on Zoom as well, so just put your questions in the chat. We'll be able to answer it. If the chat doesn't work, I'll just give you my cell phone. You can text me, and we'll answer questions as we go. This is another view of inventory. So basically, when you look at the streets and the towns on the bottom of this chart where inventory is in a brutal cycle, New York is fourth from the bottom, and we're New York, New Jersey, right? It's just what it is. It's sort of the metro area. So we're the fourth worst inventory section in the country, meaning we have not recovered from COVID. Inventory has not come back to the market. We definitely are not building our way out of the problem of scarcity in the Northeast because for a lot of different reasons. So again, when you look at 2024 to 2025, pricing Remember I said, remember Punta Gorda, right? So Punta Gorda lost 12% of the overall value. Now, Florida being very different, the condo market in Florida is, I would describe it probably as dire through insurance, and there's a lot of different issues. We're not doing a Florida seminar, but if you look in the Northeast where we are in New Jersey, you're really like 5%. It was the average appreciation 2024 to 2025 across all segments of the market. I very much like this particular data set because it shows you the absolute low of inventory at 512,000 during COVID, November 2021, where again, we were at 1,228,000 in November of 2017. Fast forward to November 2025, nationally, we're at 1,072,000. We're still very much below on a national level where we were pre-COVID. Some parts of the country are above it. Some parts of the country, we're sitting in one, are well below it. So it averages out to that 1,072,000 inventory. So that being said, there is a little bit of a sliver when you start getting more granular and local, right? You start to see inventory pick up in our market area, 2%, 6%. So there is inventory coming, 22% in Middlesex County, 17% in Monmouth Ocean. So inventory is coming, albeit slowly. We'll go into what's happening locally. So that's sort of the national picture. If there's any questions, please put in the chat. Happy to answer it. If the chat is not working, you can take my cell phone, 609-577-6786. I have my tech wizard with me. She can tell me what you want to text. So when you look at New Jersey in 2025, I'm really focusing on the upper right-hand side of the screen. Unfortunately, New Jersey, for new inventory, was only up 1.6%, right? It's not a lot. It was not even close to, obviously, you saw the screens recovering from where we were pre-COVID. I think we all went into this year expecting 4 to 6% growth in inventory. Didn't happen pretty much across the state. A couple of pockets, Middlesex County being one of them. So again, the median close price up 6%, the average close price up 7.9%, closed sales only up 0.1%, and pending sales only up 0.3%. So overall, another tough year for the residential market in New Jersey. Overall, we're going to talk fourth quarter and what we saw there. You know, the townhouse market in New Jersey was up 1.2%. Interestingly, pending sales was down 2.8%, closed sales down 2.9%. So what happens is this: when you're in a cycle like this, and one of the reasons you're going to see that number is that buyers get priced out, right? And rates had been hovering in the mid to high sixes most of the year. They have come down recently. So, you know, you saw a little bit of a drop in contracts. Pricing still went up, but overall it was a little bit of a slacker demand. Days on market did go up 15% year over year, so that's something to watch. We'll get into that locally. Interestingly, finally, you're starting to see a break in the market. And the first break in the market that we're seeing is in the adult community. So we saw 8% more inventory across the state of New Jersey. Why is that? Because as people are locked out of the market, they can't get to the 55 plus. It's the furthest thing away from the first-time home buyer product. So if you're a first-time home buyer, you're going to buy a condo, townhouse, whatever. You're displacing somebody from the condo who buys the townhouse, the 𝐂𝐎𝐍𝐄, the colonial goes to 55 plus. Or they get a divorce and one of them goes to 55 plus, one of them goes to New York. But the people in the 55 plus, prices have gone up, buyers are stuck. So you're starting to see a little bit of inventory build in the 55 plus segment, something we're going to watch. We'll talk about on a local level. First question.
Price appreciation take inflation into account?
So the question was, does price appreciation take inflation into account? Well, interest rates take inflation into account, and we're going to talk interest rates later. Interest rates actually have come down. At least as far as we're being told, inflation's improved overall. The Fed, I don't think, is in any rush to lower rates. So it was taken into account by the fact that rates were at 7, 8. So that was the high level of inflationary pressure. Inflationary pressure is a little bit less. Rates have come down. They're bouncing in the low sixes, high fives. You can get a 7-year in the mid fives, stuff like that. So yes, prices are taken into account. Normally when rates spike, you see a drop in prices. However, because of the COVID lows where people are refinancing at 2 and 3%, 65% of this country has a rate lower than 5%. So 65% of the country has a lower interest rate than the prevailing market. So anybody who moves, prices have gone up 30 to 40%, and you're paying probably double in the interest. So it's a little bit of a tricky situation, but new listings, again, in New Jersey, not much of a big swing. The biggest swing you had was, again, 8% for 55 plus. We're going to kind of cruise through this, but again, the average sale price in New Jersey went up again last year, 8% overall for single family, 5% for townhouses and condos, 4.1% for the 50 plus. Despite the pickup in inventory in the fourth quarter, 55 plus went up 4.1% overall. So now we're going to kind of drop to the county view. Again, please drop any questions you have into the chat on Zoom, or you can shoot me a text if the chat's not working. So Mercer County, again, I predicted in my infinite wisdom about a 4% pickup in new listings. We were down 1%. So I'll take the tomatoes anytime you want to throw them at me. It's just the first quarter never happened in the residential real estate market in Mercer County. Basically, could have taken a nap and not much would have gone on. That being said, the townhouse market in Mercer County had a huge pickup because they're building new construction. West Windsor, Hopewell, Pennington, there's definitely some new construction happening. And the adult community, please pay attention to that, up 23%. So remember I said statewide, right? The numbers spiked. In Mercer County, the adult community spiked even more. We'll explain what that means later. Somerset County, you did see a little bit of a pickup in single family, 3.1. You saw a drop in townhouse market inventory, 0.6. The adult community, again, 13.8%, because people in that market segment are kind of stuck. 2% interest rate, no mortgage, paid X, now everything's double, don't want to move, I'm stuck. Or, right, people are in a colonial with a 2% mortgage and they don't want to move to a 55 plus and take a 6% mortgage. So there's just that golden handcuffed effect in the market. Middlesex County, new listings, 20% up. Thank God. It's good for everybody, right? Condo townhouses down 41%. Horrible. But at least there was some single family movement in Middlesex County. Interestingly, please pay attention, the 55 plus market up 13% in Middlesex County. So again, you're seeing that far end of the market, the furthest away from the first time home buyer, when they can't move, high rates, low inventory, people at the end of the food chain get stuck. And that's what you're seeing in the 55 plus market. So one of the things I've preached, and I've been in the residential real estate space in Princeton over 20 years, in residential real estate for, I don't know, I think 25. I've always preached that real estate is not necessarily rate driven. It's rate sensitive, but it's not rate driven. It's jobs driven. So one of the things you want to watch in 2026 is obviously unemployment. We had come through a great economic run. Right now, it's a little bouncy. We won't say more than that. But again, you're seeing the total employment start to shift. In Mercer County, a couple of major employers did just have layoffs in the fourth quarter. So the fourth quarter had a little bit of a freeze on the market because of that as well. When you look last year, so when I presented this last year, unemployment in Mercer County was at 3.6%. This year it's at 4.8%. So you saw a little bit of a shift in the market locally. Trenton, Princeton, that's this immediate quarter. So you saw a little bit of a shift. In South Jersey last year, and the toughest unemployment in New Jersey is Southeast, right? By Ocean City, like Vineland, that market. Last year was 8.3%. Oops. This year it's 7.9%. Just so you know, I don't know why this slide's not on there, but this year the unemployment came down. So we saw a little bit of a rise in unemployment in our market. They saw a little bit of a drop in unemployment in our market. It's something to watch. Jobs are the key to this whole deal in the residential real estate market. That being said, when you look at the demographics for Mercer, Middlesex, Monmouth County, they're growing. Monmouth County is about to become probably one of the most expensive destinations in the East Coast. You have the Netflix studios going in there. You have Paramount going into Bayonne. So that whole eastern part of New Jersey is going to have a huge influx of jobs, projects, housing. It's going to transform that segment of the state. Mercer County, the largest employer is Princeton University. Middlesex County has become a tech hub of the East Coast in the United States. Little people don't know that. But again, little Mercer County went from 387 to 392. Middlesex County went 863,000. Middlesex County is a massive county, right? It goes from here basically to almost the ocean. Monmouth County went from 643 to 647. You can write this down. That's going up dramatically in the next 5 years in terms of overall population. Somerset County, 357,000 from 345. So it's still rural, but growing, obviously high destination, good schools, the whole shebang. So when you look at where do we sit on the Northeast corridor, Middlesex, Monmouth, Ocean, really good. Mercer, even better. Last year, Middlesex was number one. This year, Mercer County is number one for job growth. The Newark segment, right, again, it hasn't even, you haven't really felt the effects of the kind of the big industry coming to New Jersey. And then when you get to New York, a little stagnant, you're seeing some job loss. Hopefully all those jobs are coming to Mercer and Middlesex County, Somerset County, our market area. So that's the overall picture of migration. That's the overall picture of jobs. Overall healthy. Obviously, you have to watch what's happening, but that's the picture as of today. So overall, okay, not great that, unemployment went from 3.8 to 4.8, but it is within the realm of what's considered normal. So again, this is a slide from 2018. I presented this presentation. I do it once a year. It's one of my favorite things. I said, this used to be the reason why people used to move to our market. Affordability was a big part of it, right? And it still is. It's just that affordability is a relative thing. So we're going to look at some numbers now. I still, 20 years later, look at these numbers and my jaw does drop as to what's happening in the market. So 2024, that was a slide from 2024. I didn't really have affordability in there. It was like sort of, but compared to Montclair, compared to Summit, compared to Hudson County, compared to Bergen County, Mercer, Middlesex County is affordable. And that's a scary statement, but it's true. So, the train line is a good place to buy on. Always buy close to a job center, right? Important things. And obviously look at the school reports, something we're not going to cover tonight, but affordable, yes. Relative affordable is probably the way I describe it. So let's take on West Windsor. And before we get started, there's a metric I want to talk about very quickly. It's one that we would take very seriously here. It's absorption rate. And we're going to baseline the market for you. So if you're thinking of selling in 2026, get this deck from your associate who invited you, or just reach out to the office if you're just finding us on YouTube. We'll get you the deck. Absorption rate is a pace of sales number. And I'm going to baseline what's happening. I ran all the numbers today. And I ran the inventory today. And you want to track this and you want to know what direction the market's heading in. So an absorption rate, when we look at absorption rate, anything under 5 months absorption is a seller's market by definition. Anything over 6 months of absorption is I'm sorry, I inverted that. Yeah, anything under 6 months is seller's market. Anything over 6 months is a buyer's market. There's some nuance to that, which we'll cover, but I'm going to give you the data today for each town that we're going to cover tonight. And if, again, for some reason we don't cover your town that you're interested in, let us know. We'll cover it. We'll get you the data. We're always looking for information to give out. I like data. So looking at West Windsor today, okay, and I have to start going really fast to keep us on time. So the question tab is working. Here we go. All right, so the question tab is working. So you may cover this, but any driver. So the question was, are there any drivers in our area attributed to purchasing of second homes versus purchasing primary homes? Not really. It's not really a secondary home market. I think more New Hope, Lambertville, there's definitely some secondary homes there. I think in Hopewell, along the river, far into Hopewell, some of these states, there's some second homes there. This, for the most part, is a primary home market. Princeton just banned Airbnb, so it's going to be less of that in the market. So it's not a secondary home market per se. There's a lot of people who own homes here who live abroad, but it's not. It's just because it's an international market. So looking at West Windsor, okay, as of today, single family homes in West Windsor, there's 11 for sale. There's 3 under contract and pending in the last 30 days. It's a 3.6-month absorption rate. Seller's market, by definition. Now, there's some nuance to it. Of that 11, a bunch are on the main roads. You have to take that into account and pricing, right? 4 of the 11 that are available have been reduced. So it's something you want to watch, right? You know, or sellers overshooting it, which they tend to do in the fall. Single family between 1 and 2 million. There's 1 for sale. That's it. So when something comes on, don't wait till tomorrow. Go see it tonight. Camp out in front of their house and get in it. If it's priced right and it presents well, it's going to sell quickly, right? No price reductions in that segment. Nothing above 2 million. Interestingly, a market to watch in West Windsor, I've been tracking it for a few months, is the townhouse market. And I said a few months ago, there was 35 homes for sale. There was 1 pending at the time. I said, you're going to see some price reductions in that segment. Well, you did, right? They've started to reduce. There's new construction in that segment. There's a lot of inventory. So 28 available, 3 pending in the last 30 days, buyer's market. It's not that buyers are going to take $100,000 off the asking price, but they can at least bring it down to the market price or maybe a smidge below, right? So 9 of the 28 standing homes have been price reduced. 4 have had price improvements. New construction builders raised their prices. Condos, 5. Now, nothing contingent. However, they all just came on the market like in the last 2 weeks. None of them have been reduced. Again, please look at that 55 plus market. 10 available, 0 pending, right? 6 of the 10 have had a price reduction. So you can see, right, in the condo market, there's not a lot of inventory. In that under million market, there's just not a lot of inventory, which means the 55 plus people get stuck. That's just the net effect in the market. So this is a new slide for us. We're rolling it out this year. It's a little complicated, but again, if you're watching this, you will get a copy of the deck and a PDF. So in 2000, right, there was 273 single-family homes that sold that year in West Windsor, year over year, right? The average price was, the median price was 373. The average price was about 400. Fast forward to 2007. The median was 625. The average was 638. Then it went to 664. So at 664 was the peak after the crash. And then prices came down, 587, 638, 560, 605, 660. So if you bought a house in West Windsor in 2008, on paper, you didn't break even until really like 2016, 15. So you can see like that recession had a huge impact on the markets. And then you see the COVID spike. Inventory went down, prices went up. The bottom line here on this graph is days on market, 23, 19, 17, 19, 27. That's how brisk the West Windsor market has been moving. Even last year, even though you saw a little bit more closed homes, which is positive, right? Houses were still selling in 27 days or less. However, you did see a little bit of a turn for the average and the median price from last year to this year. What does that mean? I think that buyers are more price sensitive. I think conditions going to matter. I think upgrades are going to matter. I think staging is going to matter. I think the fundamentals of the real estate market are going to matter more in 26 than they have in the past few years. When you look at the West Windsor condo townhouse market, so again, they built new construction in West Windsor. So what does that mean? It means there's supply. When there's supply, prices theoretically should soften, which is good for buyers, not great for sellers. But again, in 2020, there was 99 condo and townhouses sold. Fast forward to 2025, despite all the new construction that happened, we're down to 74. That is the perfect picture of the lock-in effect for 2 reasons. 1, people buy a condo and townhouse in West Windsor, they'll live in it, they will hang on to it as an investment. They have a 2% interest rate, 3% interest rate. They can rent it for $4,500. Their payment's $1,500. They're making a profit. So you've seen a lot of landlord activity. Plus, they've gained a lot of equity, and they don't want to pay capital gains taxes on that property. Both homeowners and investors don't want to pay that. And capital gains, I don't think it's been adjusted since 2007. So I think that's something you're going to hear bandied about, at least at the federal level this year. When you look at the 55 plus market, again, you saw in 2023, 2024, only 21 sold last year, 37 sold. More inventory, it does get absorbed, right? Prices went up in that market segment, not as dramatically as the single family home market, only because there's fewer buyers available to buy it. So, when you look at the West Windsor home market, days on market in West Windsor went from 20 to 53 in the 55 plus market. And prices, even though they went up, only went from 610 to 615. So you're starting to see a softening overall. Canal Point, an amazingly vibrant market on this side of Route 1, close to Princeton. We should probably all have bought a few of those in 2000. $149,000 was the average. Fast forward to 2025, it's $539,000 is the average. But the issue is, you can see we went inventory 54, 35, 16, 16, and 22. So people are just not selling them. Why would I give up a 2% interest rate and not make rental income and not make extra cash on my asset? So you're seeing a lot of that across the state of New Jersey, but definitely in the more affordable price points where rentals are high and the mortgage is comparatively low. So Canal Point condos and townhouses, Colonnade Point, which is the same section of West Windsor, again, just concentrate on the last 4 years, right? There at one point there should just be more turnover than there's been, but prices were flat for years until COVID. So if you bought in 2005 at 265, you did not break even again until 2017, at least on paper, right? So there was that long, just boring time where prices just sort of averaged out every year. COVID hit, prices spiked, inventory dropped, rates dropped to offset the economic malaise. People locked in at 2 and 3%, low rates, nobody's moving. So we're still in that. That being said, the days on market is starting to rise. We are seeing more inventory. There are 5 condos for sale in this segment right now, 0 pending in the last 30 days. If that continues, some of those 5 will start to reduce. And again, prices aren't falling. They're just going to reduce back to the market rate. We'll talk about that later. Plainsboro, holy cow, what a market. Absolutely scintillatingly busy. But again, it's a small market from the single family perspective anyway, right? There was always a small number of single family. So at the peak, 103, 105 in 2013 closings, last year 61. So there's not a lot of transaction volume, not a lot of people moving, not a lot of people putting their house on the market. So you see the average price, 649, 695, 783. It leveled out the last 2 years, right, at 920. So prices didn't go up. They didn't come down. They just sort of leveled out. But again, not a lot of inventory has come to the market yet in Plainsboro. I think you'll see that continue in Plainsboro. I'll give you my picks later. I think you'll see 1 to 2% appreciate in Plainsboro. The condo townhouse market, however, right, there used to be amazing turnover in that market. 238 would sell in a given year in the early 2000s. Then you went down to 99, and then now you're down to 86. Last year was the absolute low for condos and townhouses that have sold in Plainsboro since 2000. So think about that. Why is the 55 plus person stuck? Because the first time home buyer can't buy here, right? Not necessarily even from a pricing perspective. There's just not enough to buy. So inventory has gone down by half. Transactions have gone down by half, which means opportunities for first-time home buyers, which is this is their market segment, has gone down by half. So overall, it's a very undersupplied market. I think you're going to continue to see appreciation across the board in Pennington. We'll get into detail on that. So Pennington's fairly easy to cover today. There's no single families for sale. So again, something comes on, get out there early. Condos and townhouses, there's one. That condo and townhouse did take a price improvement, by the way. It did reduce. It's in the old train station. And there's 155 plus. It's a very small market segment. So you can see, I find this interesting when you look at 2005 at the peak of that market. If you bought a house at 637, you wouldn't have broken even until 2022 in Pennington. Not, again, on paper, some houses did better than the others, but the overall average of the market. So you can see, 155, 81, 90. It's not like houses always flew off the market in Pennington. Population increased, jobs increased, density increased. Housing did not, right? Building is bad, at least what people say. So home prices went up, COVID hit, boom, right? So you went from literally 519 to 951 in Pennington, and 25 closings last year, just about the bottom in terms of closings. The condo townhouse market in Pennington is such a small sample size, right? Only 13 closed last year. But again, you can see, it was never a money maker necessarily. It was a place to live. And maybe you kept it to rent it. Maybe you sold it. You took your equity out. But again, that COVID spike and again, people keeping them is just keeping the market locked up. Hopefully that will change in the near future. Hopewell Township, again, massive municipality, should be a lot more on the market than there is today. So right now, if you're a buyer or seller in Hopewell, like you want this data because you want to bookmark it and you want to measure when you buy against this data set, right? So single families in Hopewell, there's 15 for sale, 3 active contracts, 3 contracts, 5-month absorption rate. By definition, a seller's market, but we'll get into the nuance of that. 7 of the 15 took a price reduction, right? So you'll see like that overall flattening from the fourth quarter, where the job losses hit. People got nervous. We'll ignore the politics of the moment, but things are turbulent, right, at the federal level. So when you look at the single family under $1 million, there's only 7, and there's 4 contingent, right? So in that market segment, between 1 and 1.9. So that's a very robust market. Absorption rate of 1.71. 2 of the 7 reduced. 1 made the decision to increase their price, right? There's new construction. As new construction sells out, the prices go up. The single family above 2 million, there's 4, no contracts. Again, that's the luxury market in Hopewell. The luxury market is very seasonal. It's really February to June is when you'll see the most activity in the luxury market across the spectrum of New Jersey. Townhouses, they're building townhouses in Hopewell. There's a lot of them. There's a big Lennar project. I'm actually going out there tomorrow for a client to check it out. So 16 active, 11 contingent. Build them, people will buy them. 1.45 absorption rate, 2 reduced, 2 increased. Again, that's that builder activity. There's nothing on the market in the 55 plus. But again, when you look at Hopewell, Hopewell got hit pretty hard. 2006, 2007, 2008, 2009, 2010. It bottomed out in 2011. So if you bought in 2005 and your average price was 717, come over to 2022, that's when you broke even from a price perspective, not paying your mortgage, not building equity or any of that stuff, or getting your tax break or any of those things. Those add up too. But you can see Hopewell was a place where the market was flat until COVID. And you can see in 2021, that post-COVID bump, when people started moving out of the city, they moved to the country. And Hopewell is very rural, very pretty, right? 278, 288. And now inventory rates went up, right? People got locked in at that 2%, and boom, you saw that spike in Hopewell overall. And interestingly, the days on market in Hopewell went down again, and they had their lowest closing year in the last 10 years, meaning just not a lot of inventory came to the market in Hopewell. Projecting that to change, I'll give you that number, but the single-family market in Hopewell is pretty locked up. That being said, it doesn't mean you can slap any price on a house in Hopewell. You have to price it right? I watched houses expire. They went on the market. They didn't sell last year. If the market's at $1 million, the seller's like, well, the market's great for sellers. I'll put it at $1 million too. Don't bother. You're not selling. You have to put it at $1 million. It's got to be staged. It's got to look right, photos, et cetera, et cetera. You actually have to have a marketing plan for the house. But if you look at the single-family homes in Hopewell below $1 million, right, there's a lot more, and please pay attention to this slide. So this is the net effect of what's going to happen next in our market segment. There's 122 homes below $1 million single-family that closed in Hopewell last year. Just remember that number. I'll talk about it later. But again, if you bought a single-family home in Hopewell at $550, it really was right around 2017, 18. You saw prices come up to the point where you could break even on paper. Again, you're building equity, you're getting a tax break, so that money compounds. But it really went off in COVID. The COVID spike helped, rates went up, inventory dropped, and really Hopewell has taken off. The above 1 million market used to be somewhat rare in Hopewell, right? It wasn't like an everyday thing where $1 million plus house came on in Hopewell. It's still not a huge segment of the market. There's still more single families below $1 million than there is above. But nonetheless, right, what $1.5 million buys you in Hopewell and $1.5 million buys you in South Brunswick or Princeton, two completely separate things. You get 3 acres, you get a pool, you get a tennis court, you get the whole shebang. So, and again, they sold faster last year despite the price hike in Hopewell, right? Prices continue to go up, days on market continue to go down. People are looking for a house versus a location. Hopewell's a great destination point for you. And again, the condo townhouse market, look what happens when you build new construction. New construction is not toxic. Kids are not toxic for schools. Believe it or not, parents with kids spend more money locally than parents without them. I never go to the grocery store anymore. My kids are all in college, so I never go to the grocery store. So 103 in 2024, down to 86 this year. But again, the overall appreciation, despite the new construction, is there. The new construction prices are not cheap in Hopewell for the townhouses, but they are selling at a pretty good pace overall. Hopewell Borough, I don't have the today's data just because it's such a small sample size. There's really nothing on the market today. But again, when you look at the long-term trend of pricing in Hopewell Borough, it was sort of a place where, it took a little bit of time, 120 days, 113 days, 111 days to buy a house, sell a house, I should say. And then right about here, right, you see the days on market start to go down, and that's where you start to see the price bump and the price go up. Once that COVID spike hit, Hopewell Borough became a little bit of a destination, right? Prices went up. There's a lot of investment in the little downtown area. So, last year there was a little bit of a drop in the average and the median price, and there was a little bit of a pickup in the days on market. It's, again, something to watch and baseline as the year goes on. Robbinsville, pretty much nothing on the market. Robbinsville, I think, has been one of the most incredible markets in our area for what's happened, I just think, for pricing. And what the town did, the town built a downtown. They said, we don't have a downtown. We want one. We're going to build one. It's called Town Center. It has restaurants. It's got apartments. It's got townhouses. It's got condos. So the town just reimagined what Robbinsville should be. They invested a lot of money in the high school, which is beautiful. And all of a sudden, it became a destination address. So the single family market in Robbinsville today, 8 under $1 million, 2 pending, 4-month absorption rate, 2 of them reduced, right? Single family 1 to 1, 9, 4, 0 under contract. So again, you have to look at this. Are they priced above market? If you're a buyer, don't wait. Get in there before they reduce. Take a look at it. If you're a seller and you're putting your house on the market, see how yours compares against theirs. Townhouse, very robust townhouse market. There's 6, 2, 3. Of these 6, 5 came on in the last 2 weeks. 0 reductions. So you kind of have to look at days on market and stuff like that. Condos have been struggling a little bit in Robbinsville. They built a lot of them. I think they're overall pretty good. The issue for the condos in that segment, a bunch of them had assessments, right, which people have to pay. So people want to sell them without paying the assessment. Nobody wants to buy it until the assessment's paid. So it's at a little bit of a lock, but you can negotiate those kind of things. But again, this is what I mean by one of the more outstanding things that's ever happened in Mercer County when you look at Robbinsville real estate. 2019, 559. It was the place to go to get that big house, good school, nice little downtown area, and you could get a really nice house. And now it's a lot more expensive, right? So 911,000 is the average, and again, 890 is the median. There was a little drop in the median last year, but overall, there's just not a lot of inventory in the Robbinsville segment. The condo townhouse market saw a little bit of a dip overall, but that's driven by the condos, not the townhouses. The townhouses' average sale price went up, but the condos, unfortunately, came down a little bit because of the assessments that are being dealt with there. So any questions so far? Obviously. Oh, so Zoom people, you can use the Q&A. Let's look at the Q&A. I'm sorry. I just like talking about real estate. What about developers building rental units rather than homes and condos? Okay, that's a great question. What time is it? 6:57. I could do 2 hours on that, right? I'm going to give you the 60-second answer. We're seeing it across New Jersey. Why are so many apartments being built? Mount Laurel housing law. So here's the deal. In New Jersey, in the 70s, there was the Mount Laurel case, and the state ruled against New Jersey. The courts ruled against New Jersey and said, you're all being discriminatory. by your zoning laws. Your zoning laws are designed to keep people out of your towns. And it was a Supreme Court, right? It was in Mount Laurel, New Jersey. The town lost. That became enshrined in the state constitution. Murphy passed a law basically codifying the Mount Laurel decision, even more so. So now each town is, I don't want to say under the gun, each town is obligated to produce affordable housing. There's a number, there's a calculation based on density, population, everything else. So when the towns have a decision, I can let you, as a developer, build an apartment building of 100 units on your dime. I'll give you a tax break. It's called a pilot, payment in lieu of taxes. And 20% of them, 20 units, are designated affordable, right? Or the town can say, I'm going to build 100 units myself, and I have to pay for it myself, which means I have to raise my taxes, which means our taxpayers are going to get annoyed, right? So they're looking to get ahead of the Mount Laurel mandates. To sum it up, why the apartments? The towns that want to get ahead of it are smart, because any town that keeps suing the state loses. 29 towns just lost last week. And what happens is, after March 15th, if you don't have your plans in place, builders can sue you as the town under a law called a solution called builder's remedy. The state's going to assign a special master to your town. So please, after this is over, Google Milburn affordable housing lawsuit, and Milburn just did everything wrong. They did it wrong. They had a plan at the last second. They vetoed it. The council, basically the state's taken over, because, right, that's why so many apartment houses are being built, to get ahead of the affordable housing mandates given by the state. And again, it's to protect diversity. I'd rather see more condos being built. Selfishly, it gives people a step up on the equity ladder. But again, it's not my money. I'm not building them. So that's a condensed answer for that. All right. Cranberry single family, another amazing story. Again, Cranberry used to take a long time to sell a house. It wasn't like it used to sell today. Like, Cranberry was like, you put a house in the market, you come back in a few months, you check in. Literally, it was a long time, 144 days, right? 129 days. So it wasn't like these immediate sales that happened. Now there's like the agents who specialize, and there's one that works here in Cranberry. They have a whole off-market network in Cranberry. Like, it's that fierce. It's a small town, low population, small inventory. So only 24 single-family houses transacted in Cranberry. But again, 685 was the average. Last year, it broke $1 million. It's just what happened in COVID. And by the way, good schools, right? Under $1 million. Look at the days on market. It went from 147 at its peak to 43. And those are the ones that made it to the market. There's so many that don't in Cranberry. So the single family above $1 million, right? Incredibly, when you look at the days on market in 2004, and again, the 271, these were huge houses that took a long time to sell. 326, 227, last year 34. The average, again, it hasn't changed because I'm only baselining the $1 million plus. But the really interesting thing is, $1 million plus in Cranberry is, I don't want to say nothing anymore. It's a lot of money, but it's very commonplace. The average single family broke $1 million last year for the first time, and they're selling at a record pace, not projected to change. There is a 55 plus segment in Cranberry. However, they're just not moving. They get there, they just kind of stay there, and they hang out, and they never move, because only 7 sold last year. Prices are good. When they came on the market, they were in the 3s. Now they're in the 8s, which is incredible. But that's that. So Lawrenceville, again, used to be one of the most robust inventory markets in our territory. There's only 11 houses, single families under $1 million today in Lawrenceville, and there's 11 contingent. So please understand this. West Windsor breaks $1 million single family home price. Cranberry breaks $1 million single family home price. Princeton's 1.7. Hopewell is in the high 8s, right? Montgomery's 1.3. I'll get to that. Lawrenceville is a comparatively good deal, right? I can get a much bigger house in Lawrenceville than I can in Princeton, for sure, West Windsor. So again, why is Lawrenceville so robust? Because it's comparatively affordable. There was a question that popped up. Oh, did we miss Lawrenceville? No, I'm doing it right now. Did I miss West Windsor? Yes, you missed West Windsor on YouTube. This is recorded live. It's your associate can send you the link. I will get you, Rob. I see your email. I will get you the deck as a PDF when we're done. And again, it'll be recorded live on YouTube. So again, Lawrenceville, crazy, crazy busy market. But again, it's the majority of the single families are below $1 million, right? It's not that normal to have $1 million plus house in Lawrenceville. Again, if you did, pool, tennis court, 5,000 square feet, 6 bedrooms, 6.5 baths versus $1.5 million in Princeton, which is a house that's probably like 2,500 square feet, right? And 3 bedrooms. So again, the 2 million plus market, it's not that robust in Lawrenceville. There's not as much of it. Very robust townhouse market. There's 5 for sale, 1 pending, 5 months absorption rate. 2 took a price reduction because again, that fourth quarter freeze that we went through last year, which I'm going to talk about. And the 55 plus market overall is very robust. But again, when you look at Lawrenceville, I mean, look at the density of where things used to sell, 277, 275. There's a lot of inventory in Lawrenceville. And again, the crash happened 2008, 2009, 2010. So if you bought in Lawrenceville in 2005 at 472 and you can zoom over here, you really weren't breaking even until 2021, theoretically. Not quite that dire, but on paper, right? So, you know, when you look at the market started picking up again here, and then obviously, right, the COVID spike. But look at the trend here. 146, 165, 181. So you're seeing more single families coming on the market in Lawrenceville, and you're seeing more single families absorbed in Lawrenceville. Why? Because it makes fiscal sense. I can get a lot more house for my 3 kids in Lawrenceville than I can in Princeton or West Windsor or Montgomery. It just is what it is. So the condo townhouse market, you see it took a little bit of a turn year over year. Nothing negative. I just think a lot of the cheaper ones have come on. I think some investors are taking some cash and some equity out. You did see a little bit of a spike in days on market. But again, it was just sort of like, you know, the market bebopped along. And then all of a sudden, that COVID spike, there was 175 that sold in 2020. Last year, 105 sold. And it was going in the wrong direction, 2020, 2024, 2025. So it's something to watch. Hillsborough, crazy big market, getting more dense. There's houses in Hillsborough that are now selling for $1.8 million, which if you said that to me 15 years ago, I said, stop. Like, you know, don't day drink. That's crazy. There's no 1.6 houses in Hillsborough. There's a whole community of them, and they have a waiting list. How about that? Like, it's nuts. New construction happening in Hillsborough. It's a pretty exciting municipality. So again, overall, very healthy. So the single-family home market is starting to come back in the right direction. There is new construction there, right? You're going to see more transactional opportunities in Hillsborough than we've seen in the last 5 years. I think that'll continue. The condo townhouse market moving in the right direction, albeit very slowly. And again, you can see the massive spike of 275 to 455 for the condo townhouse market in Hillsborough. It used to be just slow and steady, Eddie, right? And again, at the worst, it was 135 days to sell versus now 30. So it's a pretty good spread of time that we're looking at. Montgomery, I'm not a Spanish speaker, but if I were, I would say it's en fuego, which means on fire, because it's on fire. I don't know how else to describe it. There's basically nothing for sale. It's one of the hottest markets in our territory. And if you look at the spike here, right, 1 million, 1.00, 989 on the median, 1.11 last year. And again, unfortunately, the single family home market's going in the wrong direction. At least it has been. 117 to 109 in the last 3 years. We've seen less inventory and more demand in Montgomery in the last 3 years than any other segment of our market. It's a very robust market. So if you ask me what changed in Montgomery, schools. The school report jumped dramatically. People went north, they followed the schools, and all of a sudden the market really started to blow up. Now, the other thing too that's interesting that I think will help Montgomery, a lot of the houses were built 25 years ago, right? 30 years ago. All those original owners are moving out. So that I'm predicting more inventory for Montgomery for 2020, whatever year we are, 6. Montgomery Woods, I like this because, again, Montgomery Woods was just like, gosh, you can buy a house and it's affordable and it's like $200,000. I could get a 3-bedroom, 2-bath townhouse for $228,000. Well, now it's $565,000. It's incredible. They've doubled in price since I came to the market. A little bit of a spike in days on market last year. little bit of an increase in inventory last year. So it's something to watch. Do I think prices are going to come down dramatically? 20,000 is not dramatic. And as rates come down, this is a very rate sensitive segment of the market, right? So we'll watch that. Princeton, let me just go back to make sure I didn't, ooh, Jesus, I stopped. Sorry, I hit the wrong button. Sorry. You're welcome. What's driving sales in Lawrenceville? I think it's the A word, affordability. I literally just did a segment today. What does 1.5 million buy you in West Windsor, Hopewell, Princeton, Montgomery, and Lawrenceville? In Lawrenceville, it was a 6-bedroom, 6.5 bath house with a pool and a tennis court. I think it was 5,400 square feet on 3 acres. In Princeton, $1.5 million, it was 2,700 square foot split level. I think it's just the affordability index is much better in Lawrenceville. So Princeton, again, fascinating market. I live here. Our office is here. We do business in South Brunswick everywhere, but people like Princeton because it's like Beverly Hills. It's just expensive. Why is Princeton so expensive? Princeton University, full stop, the end. So it's the largest job center in Mercer County, right? Princeton University has its own lending program. So if you're a tenured professor, you get a 33% equity check from the university. So if you buy $1 million house, the university gives you $333,000 to put down. If the rates are at 6, you get 4. You get about 2 points difference, and you pay over a 40-year loan versus a 30. So that's a huge driver, and they have to be in a certain mileage of Princeton University. That's number one. Number two is the schools, right? A lot of kids from Princeton High School graduate and go to Ivy League schools. So people look at that with their kids and go, I got to get my kid in there because they're going to go to an Ivy League school. Not necessarily the case. Trust me, I know. The other piece of it is too, as boomers age out in Montgomery, Hopewell, wherever, in the exurbs, as I call them, they want to walk to McCarter Theater. So where do they come? They don't go to Jersey City, New York. They're coming to Princeton or Montclair or Summit. And that's driving the price in the downtown market segment. So in Princeton right now, single families below $1 million, 0, 1 to 1.9, 4. There's more under contract than there is for sale. Again, but 2 of those 4 between $1 million and $2 million did take a price reduction. You can't put your house on the market here if it's worth this. So sellers, this is not an invitation to overprice your house. It's not going to happen. So single families, 2 to 3 million, 9, 0 when pending in the last 30 days. Why? I personally think a lot of them are not priced appropriately. 3 of them have taken a price reduction. 1 took a price improvement upward, not downward. And then when you look at the 3 million plus market, there's 14, 1 went pending for a 14-month price absorption rate. 3 of the 14 took a price reduction. Very subjective market, whatever. The townhouse market in Princeton is a little misleading. There's 5 for sale, 2 pending, but of the 5, I think 2 or 3 are above like 1.8. Like it's insane. So, and they've been for sale for 10 years, so it's not like you have to be in a rush to buy them. A couple duplexes came on the market. There is no 55 plus in Princeton, so can't buy it here if that's your target. So look at the pricing in Princeton. It's a tough market, This is the entirety of the market, and I'm going to kind of cruise this slide. So in the peak, 290 homes sold in Princeton. Last year, 189. So you're down by a third. So there's third less inventory. So remember when we started nationally and I showed you the brown is bad chart? Princeton, Lawrenceville, Montgomery, West Windsor are so emblematic of it. Princeton even more so because it's people want to live here for the various reasons that I mentioned, right? When you look at the pricing, the average single-family home in Princeton is $1.78 million. It's an incredible amount of money. The median is 1.56, and days on market drops. The more expensive it gets, the faster they sell, right? This is the slide I really wanted to show you because I think it encapsulates the affordability dilemma that is facing us and why towns are, I don't want to say desperate because that's could be perceived as a negative word. Towns are trying to get ahead of this Mount Laurel, right? Because the state's looking at this going, we have a problem and affordability is a problem and you're going to build housing or we're going to build it for you. I mean, that's how binary this is. So in 2000, 203 single family homes sold under $1 million in Princeton. Last year, 33. I can pretty much stop the presentation here. right? And the days on market have gone down every year, right? So you can see what's happened. So that's a single family under a million. This is the single family 1 to 2 million. So in 2000, only 31 houses sold in Princeton above 2 million. Last year, it's 99. That's a massive increase. So what used to be 800 is now 1.6, right? You could buy split level for 750, which I did in Riverside. It's probably worth, I don't know, 1.3. And it hasn't changed. The only thing that's new about it is the countertop and the roof. Like that's it, right? So you could take that split level that I bought for 750, that's now worth 1.3, knock it down, remove the house from the lot, and you could sell the dirt for 1.3. That's how expensive the land is in Princeton. So Princeton's a little bit of a funky market that way. I'm just going to go to the questions because I see things popping in here. Co-living or ADUs? Okay, yeah, we'll get to that. Yeah, co-living and ADUs. We'll talk about that because there's going to be some level of co-living coming in Princeton. Robert Hillier's building it, not co-living quite, but and ADUs obviously are very popular here in Princeton. When you look at the 2 million segment, again, right? There was 4 that sold in 2000 and 81 and then 60 in the last 2 years. Because again, what used to cost 1.5 is now 2.5. It just is what it is. There's just fewer affordable houses, and the way the planning of West Windsor, Lawrenceville, Montgomery, half acre subdivision, that's considered exclusionary, right, under the Mount Laurel law. So they have to build density where they can build it. If you want a really interesting article, Google Cranberry, Mount Laurel, affordable housing lawsuit farm. It's the most fascinating story of last year in the market from eminent domain. So again, this is the million sale price, but again, this is the median for the 2+ market in Princeton. And again, you can see here it looks a little like it came down. It didn't. If I segmented this, which I will next week, and I apologize, I should have done it for today, I really have to do 2 to 3 and 3+, because there was more $3 million transactions last year than at any point in Princeton history. So it's just a kind of a crazy market. The townhouse market, again, it used to be a place where you could get in on the housing ladder, buy a condo, buy a townhouse, Washington Oaks, Governor's Lane, Queenston Commons, no relation, same neighborhood, and start building equity and, get into the neighborhoods. Now, right, now they're very expensive, right? So again, you could buy a condo townhouse in Princeton for 282. Now it's 925. It's the average. Like it's hard. And this year in Princeton, they are building more townhouses. Toll Brothers is building more townhouses just north of the shopping center. They're starting at 1.5, and they're pretty dense. And they're all going to sell. They're all going to sell in a heartbeat. Just so you know. Washington Oaks. Again, the slide looks a little crazy. We saw a little bit of a pause in the fourth quarter, which I think has sort of recovered itself. Griggs Farm, an amazing market. Used to be able to buy a condo or townhouse in there for $129,000. The average now is $657. So everywhere across Princeton, everywhere across Mercer County, it's affordable. We'll kind of cruise through this. We're going to go to forecasts. So last year, this was my pick. This is what I said. I said rates were going to kind of bounce around in that segment. I went with the Moody's, Morgan Stanley, and I was right. They just sort of bounced around in the beginning of the year in the high 6s, and then it sort of eased down as the year went a little bit. And then obviously in the fourth quarter, they took a pretty big drop, but I will say I was right on that one. My forecast for rates this year is 5.99999. I just think that's just where they're going to bounce around. I don't think you're going to see much. Allegedly, the economy is doing well. I happen to agree with it based on the consumer experience we see, but I think you're going to see rates in the 5.99 kind of range. What I want to point out, right, and this is important, okay, this is really, really important. Price sensitivity is now part of the market. It wasn't part of the market for a while. So in 2021, in Mercer County, the whole county, 1,037 homes sold for cash. That's a lot. Fast forward to 225, only 726 homes sold for cash, which is still a massive amount. Princeton's at 40% cash. But what that tells you is that the more and more of the buyer pool has a mortgage. So what does that mean? As rates bounce and go up and down, they're going to pause and then jump, and then pause and then jump. So, rates, people are more rate sensitive today than they were in the early part of COVID, where people were just cashing out and trying to get out of a city or, whatever. So there's more rate sensitivity overall in the market. This is a Zillow forecast for our market segment. You can pretty much put them, they put us at about 4.8% average, about 4% average for the year. I don't really disagree with them as sort of a median number. Some's going to be more, some's going to be less. Moody's is about 3 to 3.5 to 4% for the projection for the year. Here's what I think is going to happen. Oh no, this is one more thing I want to show you. So I do think more inventory is going to come, right? So when you look at Mercer County, for the whole county, I didn't do Somerset and Middlesex, just, it doesn't matter. It's the same picture everywhere. Middlesex even more so. In the fourth quarter of 2024, there were 750 listings. In the fourth quarter of 2025, 792. Not a massive amount, but it's a change, right? And you saw the biggest pick in inventory in the fourth quarter than we did all year. Okay. Units sold last year in the fourth quarter, 864. This year, 772. More came on, less sold immediately. You start to saw, people overshot the market. If the market was at 600, they priced at 650. So they had to reduce, come back to the market. Pendings were about even, right? So as inventory came on, right, it sold. But again, when you look at the current inventory, this is inverted. Darn it, I inverted this. The current inventory is 606. Last year was 480. I apologize. I was pulling this data today because I wanted it fresh. So the current inventory in Mercer County is 606. Last year was 480. It's more inventory. More inventory means a little more choice, right? Buyers, not across the board, right? Not in Princeton below 2 million, not in West Windsor 1 to 2 million, not in Robbinsville, under 1 million. So there's certain sweet spots that it's going to be brutal, but again, you can pick your battles. So Plainsboro, if you ask me for my prediction for Plainsboro, I think you'll see a 5% increase across the board for inventory. I think the majority of that will be absorbed. I think the fastest absorption will be in Plainsboro in that 1 to 2 million single family home segment. I think there's going to be good condo market transaction. I don't see massive appreciation there because I think you're going to see, a little bit more inventory coming on there. So I think 1 to 2% for condo appreciation. I think overall the market's going to be, it'll be about 2, and then, the single family home market 1 to 2 overall. So I think Plainsboro is going to be healthy. I think you're going to see a little more inventory. You're going to see some appreciation. West Windsor, I think you're going to see more inventory, 5% more should be. It will get absorbed if it's priced right. If you overshoot the market's seller, you're going to sit. You'll see, 3 to 5% appreciation depending on the street, the neighborhood, et cetera. The closer you are to the train in West Windsor, the faster your house is going to sell. It is what it is. Why? Access to jobs. I think the single family home market is, I don't want to say it's played out in West Windsor, but there's just a lot less of them under $1 million than there used to be. And they tend to be on the older, main, busier roads, which again is, you have to be willing to adjust for that. So you'll see about 2% more inventory. It will get absorbed because it's affordable. The 1 to 2 million is still going to be like scintillatingly busy. I don't know if we're going to see as much appreciation as we saw last year, but you're still going to see appreciation in that 1 to 2 million segment. There's just not a lot of it. I think there's one for sale today. In the 2 million market, I think you're going to see more houses come on. Not because, for any other reason, the house is just appreciated into that price point. Robbinsville, I think you're going to see a chunk more inventory. They, again, they built inventory in Robbinsville in the last 20 years where a lot of these other towns didn't. I think you'll see 6 to 7% more inventory. I think majority of it's going to get absorbed. I do think you're going to see appreciation continue in Robbinsville. It's comparatively affordable compared to Montgomery or West Windsor. I think it's a great, awesome market. Single family below $1 million, again, it's getting harder to find them. They're there, but again, they tend to be the older houses versus the ones that were built in the last 25, 30 years. The single family $1 to $2 million market, and again, I'm sort of saying like those are the ones in the subdivisions. They're going to see the most inventory. They're going to see the most appreciation. And I do think the townhouse market will continue to be healthy overall because it's comparatively affordable. Hopewell, I think you're going to see a chunk more inventory in Hopewell for a couple reasons. They're still building it, right? So I'm going out there tomorrow to look at a house for $1.3 million for a customer. It's really nice. It's a really nice house. So you're going to see more inventory because it's being built by builders. I do think it's time for people to move that have just been hanging on. The majority of it's going to get absorbed if you overprice your house or if you're on a busy road or if you're in a floodplain. Again, Hopewell, septic versus public sewer. Public sewer sells faster than septic over 20 years old. There's little Local knowledge is really important. You got to know what's happening in the market. I think overall, you're going to see probably 1 to 2% overall in the markets in Hopewell. The less expensive the product, single family, the less expensive condo, the more appreciation. Lawrenceville, I think you're going to see 8% more inventory. If you don't, something's really wrong because it's a massive municipality. The majority of that's going to get absorbed. I think you're going to start to see the upper end of Lawrenceville plateau, meaning that it's a subjective market and you don't have to move in or out of that market. I can stay where I am kind of thing. But I do think that robust under $1 million market segment is going to continue because again, these other towns are so ridiculously priced. I think in the under $1 million market in Lawrenceville, you'll probably see 3 to 5% appreciation. In the $1 million plus market in Lawrenceville, you'll probably see 2%. Condo and townhouses, I think you'll see probably 2 to 4% overall appreciation in Lawrenceville. So Princeton, here's my guess for Princeton. Single family, you're going to see less inventory come on the market under $1 million. There's just less of it available. The dirt costs $1 million, right? So forget the house. So you'll see 10% appreciation could be in that market segment. I think when you fast forward to the 3 million plus market, you'll see more inventory, be more of a challenge for it to get absorbed. How many 3 million plus buyers are there? We'll see. There was a great market run in the 3 million plus in Princeton. I think overall in that middle segment, 1 to 2 million is going to be very healthy in Princeton. So you'll continue to see pretty good appreciation. You'll see more inventory. If it's priced right and positioned well, it's all going to get absorbed. The townhouse below $1 million, you'll see 5% more inventory. Majority of it gets absorbed again, unless the seller, majorly overshoots the market. You will continue appreciation. That upper end townhouse market, it's not appreciating. It's not really going down, but it's just not appreciating. So that's it. That's a lot. I think I just lost my voice. And now I'm going to do Q&A. So I'm going to go back to co-living. So if you Google Robert Hillier, Witherspoon Street, right? He's going to build apartments that have shared bathrooms. Not quite like roommates, but, kind of co-living. And the ADU market in Princeton is incredibly robust. Incredibly robust. We just sold 2, one for $900, one sold off market on Moore Street for $950. So ADUs are mini houses. You can go to PrincetonHomeConnections.com, check that out. But that's the ADU market in Princeton. Yeah, super robust. Oops, damn it. Sorry, I keep hitting the wrong button. Sorry. What questions do you guys have for me? Let's go to Q&A, whether you're on YouTube. Do you expect ADU co-living to be allowed in surrounding areas? So the question is, do I expect ADU and co-living to be allowed in surrounding areas? I expect it to be allowed in New Jersey, period. Right now, it's Princeton, Montclair, West Orange, Asbury Park. Princeton, Montclair, West Orange, Asbury Park. Allow ADUs to be built by code. So if you're in Princeton, you're a single family homeowner, by right, you can build an ADU. It may not work on your lot, but you can do it by right. Those other towns are the same. I expect New Jersey to do that. The ex-administration of Eric Adams in New York City, sort of a bumpy ride for that guy and his team, but they did build a city of yes, and they allowed ADUs to be built in New York. So you really haven't seen the effect of that in New York City in the 5 boroughs, but I think you will in the next 5 years. We really haven't seen the effect of the ADU market in Princeton, but I think in the next 5 years, it's going to be a whole, I'll be tracking ADUs like I track condos in Palmer Square in Princeton. And then it's going to go to West Windsor. It's definitely going to go to Montgomery and Hopewell because they have more space, right? So each town's going to take a different cut at it. I think the state will probably pass legislation at some point to say, look, fix it or we're going to fix it for you, which is what happened in the Mount Laurel housing. Any questions on YouTube? Quiet crowd. Okay. Any other questions before we break? Okay. I'm embarrassed to say I forgot to record this on Zoom, which is kind of embarrassing. Was it recording? Thank God. Oh, co-living. Okay. Awesome. So co-living, Google Witherspoon Street, Princeton, Robert Hillier. And again, he's going to build little buildings. He's going to redevelop that whole area, and he's going to build. So instead of having a 3-bedroom apartment with 2 bathrooms, he'll have a 1-bedroom or 2-bedroom apartment with a when you travel in Europe and you stay in a pension, you share a bathroom. You're going to see some of that coming back. It was sort of out of favor for a long time, but it's coming back in the market. So it'll be interesting. Again, people freak out when people propose building and development. Neighbors freak out. Preserve historic Princeton. I'm not knocking it. They bought into a neighborhood. It looks one way. It's going to look different and feel different. I get the apprehension, but change is happening. It does happen. But what happened with the Mount Laurel is speeding up, and I think what's going to happen at the ADU and the co-living is going to speed up too, because it's just a very dense state. It's getting denser, and some major industries are coming here. So I don't see any lessening of it all. I do think, by the way, like people will age out, right, and time out, and people are going to get married, people are going to get divorced, people are going to get fired, people are going to get hired. That's just real estate. But I think people have been staying put. I know people who are divorced and living together because just like can't afford to move. Too complicated. Any thoughts on the rental market? Yeah, the rental market overall, if you're a resale renter, meaning like if you're, I'm sorry, a landlord, meaning you own a single family home in West Windsor, Princeton, Lawrenceville, Hopewell, South Brunswick, like just our market area, Franklin, whatever, you have competition. And the competition is the big institutional builders, right? Avalon, these big REITs and these trusts, and they build pretty big stuff. They give 20% of it to affordable housing, so the town gets the affordable housing credit, which they need. So overall, I think rental prices are continuing to go up, albeit a lot slower than they were, especially in the COVID spike where rental prices doubled in like 12 months. They've come way down, and they are appreciating at a softer pace than they were at any time that I've tracked the market. I usually do another presentation for investors on the rental market. So anonymous attendee, just keep an eye out for that. I don't know how you found out about this one, but we'll get that out. I sort of do the same thing for investors, and I just kind of go through the rental market, what's coming in the market, pipeline, et cetera, et cetera. So yeah, I think overall the rental market's healthy, but quality matters. Quality matters. Like if you're in Princeton, go to the Alice. It's really nice. You go in there, you're like, wow, this is really nice. I can live here and I don't have to mow my lawn. And like there's coffee in the lobby in the morning. So there's some serious competition in the rental segment, and it's going to continue to grow as the state figures out this Mount Laurel obligation. Another question? Please let us know how to get your investor presentation. I will. I would say whoever you found out about this, the same channel, it'll go out. I usually do that at the end of February, beginning of March, and again, it's just sort of like same level of nerdiness on the rental investor segment. But obviously, if you have questions, you can reach out to your associate or anybody at the office. We're happy to help on that. Okay. And drivers in our area attributing more persons to second homes versus person primary. So, there's not a lot of, I don't know if it was the same, you asked the same question. This is not a huge secondary home market in Princeton. We have a property management company that we own, Princeton Property Management Services, and operate. And I have homeowners that live in Turkey, and they rent their property here in Hong Kong. And it's an asset. They lived here. They were at the university. They had a job here, and they kept it, and they're renting it, and we manage it for them. We don't see a lot of I come here on the weekends. At least I don't intersect with a lot of people. I just did have a client come out of New York. He's looking for pied-à-terre in Princeton. We were talking about it. He's a New Yorker, he and his partner, and grew up in Lawrenceville, want to kind of come back out this way a little bit. So it's not as common as you might think. At least it's not a broad segment of the market. This is a primary residence market, or I'm renting here to have my kids in the school here or because I work here, but it's not like a weekend place. That being said, Princeton is so robust and this whole market area is so robust, it could change. Like I just had somebody call last week and came out from New York for that purpose, but they would want to buy a condo, right? They'd want to buy a condo. So not like a single family home. Any other questions before we break? I know this is a lot. Again, just talk to your associate that invited you. Thank you for attending. I do love talking about real estate, so thank you for indulging me in this presentation. And again, I think we recorded it on Zoom. I hope we'll get you that recording. You can check it out on YouTube. But thank you for attending. I appreciate it. And have an awesome evening, and be in touch as you need help. Thanks, everybody.